Good evening, Regissoir. This is Ryan with TrendLizard.com. Thanks for sending me the email with a couple more tickers to analyze for you. We're going to take a look at Rio, RIO, as well as Fortescue, both trading in Australia. We will start with Rio, RIO. It was incepted back in 1996, had a little bit of chop at the start before it embarked on a very nice, large, trendy five-wave advance into the 2008 high. At that point, it underwent a very big correction, pulling back into the late 2008 low. From there, it's recovered steadily over time and has moved above a 61.8% retracement and been very strong over the course of that time. So on a very long-term time frame, it is bullish in the fact that the trends are happening to the upside, and this pullback overall looks like a counter trend move supported by the fact that it's moved above a 61.8% retracement. The question we have to ask is, has this pullback completed? Did it end in 2008? Or are we still in a very large ABC pullback that is not yet complete to the downside? So let's go ahead and dive in, take a closer look at what's happened off the 2008 high to determine what is going on and what its future prospects are. So there's two ways that we could look at this. One is that the pullback did complete in 2008 and it has since resumed a trendy five-wave move to the upside, or the second way would be that we are still in that counter trend pullback. Everything that's happened off the 2008 low is one big counter trend move. Unfortunately, I think this possibility of the two is more likely based on a couple things. One is the extent of this pullback that took place off the 2011 high into the 2016 low. Very time consuming, long move, looks more like a B wave than it does a second wave, and as you can see, it retraced more than 61.8% at that 2016 low. Both suggest to me that what we're actually looking at is a counter trend move to the upside that's been very extensive, but yet is still a counter trend move, as it is also stayed below that 2008 high. So if we put that into the context of the overall wave labeling and what's happened on Rio, this is what I think is happening. I believe that we had an A wave down into the 2008 low. Since then, we've been in a very large B wave advance that is likely nearing an end and getting ready to embark on a very large C wave decline. So if we take a little bit closer look here, first let's take a look at this advance off the 2016 low here. That move by itself is definitely a nice trendy five-wave advance, which is what we'd expect if it is a C wave up, the C wave of this B wave recovery here. Again, it looks like a nice trendy five-wave move. It counts out very cleanly. Every up move takes on a nice five-wave form, so in that respect, that is a bullish thing. The problem is it does appear to be nearing an end. It counts out very well as a move that could very well be completing and is not far from a high. So if we zoom in and look a little bit closer at what's happened in 2020, again, we see that it's a trendy five-wave move, but again, it looks like a move that is nearing completion. It counts out very well as a completing five-wave move. Again, every up leg takes on a nice five-wave form. So here's how I would trade this guy. I would wait for a larger pullback. It does appear as if five-wave moves are completing to the upside. On a larger time frame, it looks like the advance off the 2016 low is a five-wave move that is nearing an end. And if we zoom in and look just again at what's happening in 2020, it again looks like a five-wave move that is nearing an end. So while it's been strong, it's been impressive, it's been trendy, the concern is that it's a completing B-wave recovery. And that it's getting ready for a larger pullback. So from a trading perspective, what I would do if you don't own this guy is I would wait for a larger pullback to occur. A move below 57 at any point in time would be a good indication that the recovery is ending and that we're going to get a larger pullback. From there, at the least, we would expect a retracement into this yellow support area. But I think more likely it will continue through this area and continue south from there. But at the very least, I would wait for some indication of a larger pullback to indicate that indeed that this is in fact something bigger to the downside and not just a correction ahead of higher prices. So on Rio, I'm not super bullish. It looks like it could be nearing a major high, and therefore I would warn caution. A move below 57 would be an indication that a more important high is in, and that would be your cue if you own it to exit. And if you don't, to at least wait for some type of larger pullback to confirm Rio's overall intentions, with the expectation from the Elliott Wave count that we have here, that it's going to head quite a bit lower. So my recommendation would be caution on Rio. So let's go ahead and move on to the next stock that you sent me. This is Fortescue Metals Group. FSUGY is the ticker. It was incepted back in 2009. It recovered from there, but then it embarked on a very large pullback, trading from about 25, I believe, all the way down below 2. The good news is this large decline appears to be a counter-trend three-wave move. We know that anytime we see a three-wave move, it's a counter-trend move that's happening against the trend, and that has bore out with that advance off the 2016 low. Off of that low, it's embarked on a very large advance that does not yet appear complete. We have a nice 5-wave advance into that 2017 high, which was followed by a larger 3-wave pullback into the 2018 low, at which point it turned higher and has moved all the way up to a new long-term high. Now this guy looks bullish. This guy looks like it's in a 5-wave advance that has a lot of work to do to the upside before it completes. Let's go ahead and zoom in and look at a little bit more proximate action here. This is the advance off the 2018 high. You can see the big sharp move that took place into the 2020 high before a large pullback took place, a pretty choppy move. This looks like our second wave pullback. From there, it's turned higher again and has given us trendy 5-wave action to the upside. So it looks very bullish overall. I do recommend caution in the near term, and here's why. The advance off that 2020 low looks like a 5-wave move, and we know what happens when 5-wave moves complete. They lead to larger pullbacks in the other direction, and I think that's what's lining up here on Fortescue. Here's a closer look at that 5-wave advance in 2020. Again, it looks like a 5-wave move. You can see that each subdivision of each up leg counts out as a nice trendy 5-wave move, and again, looks to be nearing an end. So if you own this guy, I would own it as long as it's trading above 22, but if at any point it trades below 22, it'd be a clear indication that you're getting a larger pullback. I would wait for this event if you're looking to buy this guy. I would wait for a larger counter trend pullback to play out, and once you get that weakness, trading down to about 15 to 18, about 15 to 20, that is when you want to look to get into FSUGY. You want to wait for this large up move to be corrected. Otherwise, you're buying into an overextended stock. Then you could be near at least a near-term high that could lead to a much larger pullback before that advance resumes. Overall, this guy looks great, but on a shorter time frame, I think you need to wait for this 5-wave move to be corrected by a counter trend pullback, which would be confirmed with a move below 22 before you're a buyer on this guy. So I hope that's helpful. Have a wonderful weekend, and we will talk to you again soon. Take care.